Hi everyone, thanks for watching my videos. Today we're going to talk about part 2, Pfizer Stock, the company that develops, manufactures and sells healthcare products worldwide with market cap already over 200 billion. As usually we start with a simple Wall Street. Full information should not consider as investment advice. Still, the trading is happening almost 40% below the site's estimated fair valuation, and also company's earnings are forecasted to grow almost 4% per year. Risks are that their company has high level of debt, dividends that they are paying is not well covered by earnings, and also large one-off item impacting financial results. Also, there's profit margin is lower than the last year's. You can see that the price of share is pretty much volatile on the market. So if you, for example, brought the stock on its lowest point, if you bought the dip and you would sell probably in somewhere in October or December 3rd or 2nd, you would be profit over 50%. But anyway, 1 year return over 5%, almost as much as the industries, but not the market. And anyway, the long-term price volatility consider is less volatile than the industry's valuation. Here's the still good sign that there is room to grow. 40% almost the fair valuation based on the data inside, 64.94. Future growth is forecasted 4% annually. Earnings per share is forecasted as well as to grow. Past performance 14%. And also the financial health side, we see that there's no change since last video, so still the debt to equity ratio is 94%, considered as high. But they are anyways paying dividends. Currently the dividend yield is 3.77%, which is pretty high. But here is the pretty much not so good news. The payout is 96% from the earnings. It's paid as dividends. But anyway, good news maybe for long-term investors that future payout is forecasted to be 50% to the year 2023. On the insider trading side, we see here that last month there was individual that bought the stock, but on the 6 to 9 months there was individuals that sold a large amount of stocks. Top shareholders, Vanguard Group decreasing, BlackRock decreasing, and I see here pretty much more reds than greens. The Pfizer is dividend stock, and pretty much with it vaccine that affects over 90%, which is basically good news. And so as they would agree in the countries that their stocks will be, they're not stocks but vaccines would be buying, so they could profit a lot. But they had issues with in this year to produce those amounts that they forecasted. Anyway, that's not affecting on the next year's forecasting vaccines of amount, so I think the stock price will be growing. And tip ranks summarizing the stock on their price tag 41, so there's a little bit less than 3% upside. And in good scenarios, 12-month forecasted price target is 53. On average would be pretty much the same, and on low scenarios there will be a little bit decreased by into the level of $36 per share. Simple safe dividends, scoring this dividend safety of 75 safe, and the dividend growth was this year 6%, and it grew last 5 years 6% per year, last 20 years 7% per year. That's average numbers on a market. And uninterrupted dividend streak is on the moment 10 years. So earnings per share is decreased compared to last year, but is forecasted to be on its peak of the year's expectation, 10 years. So 10-year maximum EPS. Total sales are decreasing, but if they would get the vaccines on every country, it would be positively acting on the sales. Shares outstanding is decreasing, which is very good news. Anyway, investing.com summarizing the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.